What's up, Dumpster? You awake?
Waited for you.
Oh man, what a blessing.
Oh, that's terrible news. Are you sure you're not really tired, Dumpster?
I just don't even know how to take this, honestly. I guess the new work must be hard for you, huh? Is that what it is?
I had like 700 steps today. I was on like 19 phone calls.
Dude, I fucking hate useless meetings.
It wasn't really meetings or anything. It's kind of like quote unquote training of some sort. But
I mean,
everything's like a total shit show, and it's like he's like, it's too busy to show you anything, so I'm just gonna do it.
so that's when you say, yeah, man, that's no problem.
Order filled.
I say that too, but then he keeps asking me questions, and I'm like, God damn it.
You're still in accounting or?
FP&A.
Okay.
Damn, Shorty's early today.
I'm always early when kids go to sleep.
You're never early.
Dude, this kid, like, I swear he can talk for hours in a bed.
I mean, that's good.
Like, well, is it?
I mean, like, if they're being inquisitive, it's good.
No, they are, but I mean, he uses it to manipulate me, so that way he stays longer awake.
Yeah, so he's smart. That's good.
Shorty, how's your newborn? You haven't talked about him in a while.
He's doing good, man. Much better. Thanks for asking. Yeah, he's still on the meds that he's taking, but I mean, the meds are doing pretty good. So he's growing. You know, there's no concerns of any kind. So
that's awesome, bro.
Concerns of any kind. So, okay. I'm just gonna do this real quick, and then let's start. All right, let me share my screen. No, you guys can see it. Should be good. You guys good?
Yeah, we can see it.
Yeah.
All right. So the way we're gonna do this, we're gonna go through the PowerPoint. It's kind of like a building on PowerPoint. Now I'll let you guys know what I'm doing. If you guys got feedback, you can provide it, and we can go from there. But the idea is kind of go through the PowerPoint and then kind of look for the examples, whether it's today or potential setups on different tickers. And the only way you're gonna find like an example in a market is if you literally go through 100 charts, right? And the good traders on a night, you can literally scan, through 30 charts in 10 minutes and find a good setup, and you can trade that tomorrow. So we'll kind of go through everything that we have so far, and I'll tell you where it's going to go. And if you're not on mute, just go on mute, please. Let's see, sorry. Who was that? All right. Shelly, you're done. Need it. So, and then I'll tell you how the PowerPoint's going to evolve and what else I'm adding to it, kind of help you guys make it easier and go from there. So the first thing that I did kind of help people understand is the market auction theory. Do you guys need me to go on the presentation mode, or is this good? Can you guys see it?
This is good.
It's good.
Okay. So in any market, right? If you want to buy something and whatever you're selling, there has to be a buyer and a seller. You need to exchange hands. One needs to offer money, the other one is willing to accept the money for the product, service, whatever that might be. If there's no new information about the product, the price of the product is going to stay the same, right? And same as in the stocks, right? If the markets are in equilibrium, meaning the buyers and sellers are happy, they're going to stay within something called balance. In volume profile, we call that what? When the price is staying in what is balance in volume profile?
Accumulation.
Value.
Value
area.
Yeah.
Yeah, so our value area equals the balance, right? When we're in a value area on the volume profile, that means we're in a balance. Remember how many times today did I say, hey, today we're shorting value area high, we're buying value area low. It worked twice, right? I mean, we shorted value area high, bought value area low, and then you could have taken a short of value area high, and then last 30 minutes or like even 45 minutes are really unpredictable because you see these spikes in volume, volatility, and at that point, it's almost like gambling. A lot of traders usually stop unless you're willing to put some money on the table and forget about it. You should probably not trade too much because it can really, really reverse too many times. Because what the market makers are trying to do is kind of get you out of your trades, whatever that might be. That's against them. So when you're in a balance, for the most of the day, and you see we're in range, it's really easy to trade the bottoms of the, whether it's a structure like a balance here, meaning the Wyckoff structure, or volume profile balance, value area high, value area low. Does everybody understand what the structure means? When I say structure, what does that mean? Does everybody understand that?
Yes.
Okay, structure means it's just a channel. It has a channel, it's hitting the highs and the lows and keeps respecting in that channel. So basically, you're staying in a range. But it's not a range of value area, volume profile. It's just a structure that stays there, and there's no volume profile related to it. So, value area might be the same. It's just that it might be wider or shorter in the range-wise. So anytime you have market action, the theory is if the sellers and buyers are happy, man, the demand and supply is good, and everybody's happy, the price is not going to go too far. They're just going to exchange hands and buy and sell the shares in that area. And usually when the new information comes in here and people disagree, but let's say, Dumpster's like, no, man, I don't want to buy that PS5 for that. I'm offering you $450 because it has a flaw, this button doesn't work or something doesn't turn on. People are going to start, selling it, and then it's going to become aggressive selling. Usually people had, the idea that, more buying or more selling is the reason why the stocks move. Remember, for one share to buy, you need somebody to sell that one share. So it's always going to be the same, but it's the nature at which it's done. Is it done aggressively or is it done passively, right? If it's aggressive selling, it's going to be market sell orders, right, for the most part. If it's aggressive buying, it's going to be market buys, and usually market orders drive the market up or down. So when the big boys want to, manipulate the price, they don't need to do a lot. They just need to send a couple of big orders, and they'll drive the price up a little bit if they got enough loaded in their in their inventories, right? So they can manipulate it that way as well.
Hey, when they're manipulating, this has always been a question. What do? Just throw a giant order out there at market, and it just fills a ton of orders?
No, literally. They just go. I mean, so think about it. They're willing to lose. Let's say let's say they're long $100 million into a stock. Let's say Apple. Well, what's $10 million for them? That's 10%. So they'll add 10% more to that position, which will increase their average cost. But you're going to drive that price now a lot higher for them. So they're like, okay, well, 10 million is not bad. Well, they calculate that. So they'll calculate and be like, we'll just drive it up a little bit. Then you see all these PR news like Apple today with India. What changes from developing to China to India? I just see more problems in supply chains personally. But, people can see it as good news. What I'm talking about here, you can see it as good news or bad news. You really don't see it till the big boys step in, and that's when you can use the volume to see, is it really big boys stepping in this, or is it retail? Oh my God, the costs are going to be, I don't know what's going to go down, right? I mean, if you look at the costs and developments and economies, I don't know what's going to change. But usually the news or something about the stock is the one that creates an inefficiency, like an imbalance right here. We're in balance here, and then we have an imbalance, right? So if you're in imbalance, usually you're going to break the high or the low, right? So this example here can go both ways. In this one, the buyers are in control, right? We broke this high of the range now, and this is a lot of times when I tell you guys the breakouts are great, but they only work like maybe 30% of the time. You want the retests, and the retest is right here. This is your acceptance. And the reason why this is important is because once they bring it back up here, they're finding new value. They're finding the acceptance of the value that we broke. So then you see a reaccumulation, right, at this new level, and then you keep moving up. If it's rejected, is going to dip below that, the breakout range. And if you look at Google chart, maybe for past, I don't know, 6 months, you'll see the same concept on a daily or 4-hour chart. And on the right here is the same concept, but it broke, but it re-entry into the previous value zone. So it broke that, but then it got rejected. And honestly, and then here you have a couple of examples for long. Your long entry here is called creek, right? You would be going long here on the retest of this. And here you would actually be going short and driving it all the way to the bottom of that range. Does that make sense? Rumi, does that make sense?
Yes.
Okay. You guys are going to have a quiz on this, so hopefully it makes sense. Okay. So then, what is the 3 pieces of the market option theory, right? So of course you have, the price. You're not going to buy anything at any price, right? Time is almost like a sales event that I can think of, right? So I gave you an example of, how many times have you guys seen Apple iPhone sales event at the Apple store? You guys see that many times? Oh, they're taking 30% off iPhones?
No, not at the Apple store.
Not at the Apple store. Well, Apple is like, okay, well, I'm not selling my phone cheaper, Verizon. If you want to sell it cheaper and lock your people in a contract and screw them on this contract, sure, do it, but I want my full price here. So, there's limited sales in terms of time. And same is with the stock. It's the opportunity that you have is not there forever, right? So that's why when you're also trading options, the time is very, very important. Like when you buy and sell is fairly crucial, right? You might have the right idea, but you might be at the wrong timing, or when you buy might be wrong. And it might play out. It's just that maybe, whether the time that you bought or at the time that you bought is wrong. So the time is fairly important when you think about the value. And then the volume, right? So this is your kind of like a measuring tool. It's like a stick that tells you, hey, how valid is this? Is there more interest or less interest in this product, right? So when you see Apple sales, iPhone 14 is being released now, well, next quarter we're going to know, right? Was there more interest or less interest? If there was a lot of sales, a lot of interest. Not a lot of sales, that was less interest. Now apply the same concept to the stock. Do you guys think it's a lot more interest to buy Apple stock at 200 or 120?
120.
Yeah, simply everybody wants to buy cheaper. But now think about this. If Apple stock is at 120 tomorrow, are you going to buy it?
If I have the money to.
No, I had to watch it for a little bit, make sure that, it'd stay a good price.
Okay, that's fair. So you mentioned number 2, right? You watch time. You want to see how it reacts to this time. And if you see a trigger maybe gets out of a zone or a reaccumulation or redistribution, you would enter. But you would be watching closely to make sure that you don't miss that timely opportunity, right? And like, for instance, my entry initially on Apple stock was like 97. And I was like, okay, anything below 100, I'll take it and drive it to about 140 and I'll get out. So, my timing had to be crucial not to allow it to go over a certain period of time before, they accumulated so much and they run the stock. So the timing is crucial. And when you combine price, time, and volume, you get the value. And that's your stock. And when you trade, you're trading the value, right? You're trying to figure out what value is this stock. Is the value being accepted? Is the value being rejected of this stock? And today, you guys saw a couple of times, even on ES, depends if you're trading ES1 or US22, but you saw the price was getting rejected, the value area high, which they're saying, hey, this is a little bit too high on the extreme side. We want to take it down. And then they took it down to value area low, and then they rejected it up or bounced it up from the value area low. So it's all about the 3 components, price, time, and volume, and they create the value. And anytime a stock leaves this balance area, what do you guys think we're doing? Every time you leave this balance, what do you guys think we're doing here?
Looking for a new value.
Yeah, we always go back in a cycle. And this is literally what you need to understand. Once you leave, we get new information or whatever that might be, new news, whether it's good or bad, there's an efficiency created, imbalance. An imbalance, an efficiency. Whenever that happens, we pop or drop, then we search where's the new value, right? Are you guys going to agree that $50 for Peloton is good? Nope. Okay. Well, there's bad news on Peloton. Peloton can't sell. Shipping costs higher. This guy fired. This guy fired, and they dropped the stock. And now all of a sudden, Amazon's creeping in, and Amazon's really good at buying these beat up companies. I don't know if you guys noticed the trend, but they usually bring the companies to its knees, and then they're like, hey, how about $1 billion for your company? And then the other company's like, fuck, man, we're already dying. Nobody wants it. And then they buy it, and then boom. Amazon makes a lot of money. And I'll give you an example like Ring, if you haven't heard it. Same concept. Nobody wanted to invest that guy on Shark Tank. One guy did, right? Richard Branson invested in him, gave him a little bit of capital, 5% equity, and then little by little, that 5% for Richard Branson became a couple of $1 billion because of the buyout from Amazon. So usually there's news there, whether they're fabricated or not, right? It's different, but there's news that drive inefficiencies. Does this make sense? This screen and this screen, does it make sense to everyone?
Yes.
It's important that you guys understand it because there's only imbalance and imbalance. That's all you have to understand in the stock market. And what do you guys think? Where do we spend most of the time? 90% of the time is spent in one. Where is it?
Balance.
Balance.
Yeah, 90% of the time, guys, we're in a balance. And when I told you this, I think 2 weeks ago, most traders, including myself, we are programmed to trade balance. We're not programmed to trade imbalances. And the reason why behind that is that you're expecting these pullbacks and rejections, and then when it starts ripping, you're like, man, it can't go that high. Oh, it can't go that high. Well, you have to. That's why if you look at, when we started the Discord, what is the first thing that I put in front of you? Did I put the number of type of days that you have? Was that one of the first things in the education section? Was the type of days that we have, the 6 type of days?
Type of days and types of buyers and sellers. Yeah.
That's right.
Yep. So that was given to you for a reason. It wasn't given to you just to kind of read it and forget about it. Because if you can acknowledge what type of day we have, you just did 50% of the work for yourself. Now you just have to figure out, guys, somebody go on mute, please. I can hear myself.
Scooge.
That's why it's important to figure out what type of day we were having. So, hey, like today I figured it was going to be a wide balance. I knew yesterday just because of the CPI tomorrow. Wide balance, I'm shorting value area highs, going long the value area lows. Unless they made it extended typical, which, would have happened, and they did towards the end, right? But it wasn't nothing great. With the last 2 minutes, I really don't care about it. It needs to happen between like 2 and 4 where I would trust it enough, not the last minute pump and dump. Okay? So hopefully everybody understands this. Don't if I ask you a question about this, you need to be able to teach somebody on this and not be confused. These are the 2 pictures that you need to kind of print out and engrave it in your head. Either imbalance or an imbalance. And imbalance are either accepted or rejected. When accepted, play the retest. When rejected, play the retest of the inside area. So here it would be almost like a value area high rejection and retest and go short. Here would be go long on the value area high retest, and the same can happen on the value area low if the imbalance happens to the downside, right? So just kind of flip the picture if you want. Okay.
So balance is going to be straight across, right? We're not looking for it, at an angle or anything like that. Balance is just going to be in the value area high and low, bouncing back and forth, correct?
That's correct. And it could be a structural balance, right? That's what I was making sure everybody understands. Just because, because if you're looking at session day volume, you're only looking at 1 day. Okay. If you look at a weekly volume profile, right, it might be that we are in the value area, for a while, maybe for a week, or if you look at monthly, like July, if we'll take a look at July on ES, you'll see that we were in July for a while in the value area, meaning the whole month was just trading in a balance. And then once it broke out, it literally took off. So you just have to kind of figure out what kind of trader are you? Are you doing session days? That means you're doing intraday trading, right? If you're doing weeklies, you might be some kind of a little bit of swing trading. If you're doing monthlies, then you're definitely a swing trader, right? So understanding value area size, like if it's an intraday value area high and low, we're still trading in there, great. But what type of range are we in structurally? Has this range been going on for like a week now that we are inside a big range and value area high and low of a current day session is inside that range is also important to know. Because, for instance, if this was I'll find you a couple examples, but imagine if you had a line above here and a line below here, and that was the range, and inside here was just value area low, and this one dropped a few times below, but still bounced off the structure, non-volume profile structure, just a structure like a channel, but it's staying inside this volume profile, then hey, if this one breaks, I know I can get a bounce here, so you can go long here, expect a rejection here, and then you get out. Or once you get back inside, retest here and go long. I don't know if I'm confusing you guys or losing you, but I'll give you an example. You guys want me to give you an example now while it's fresh, or wait?
Yes. Go ahead.
All right,
Yes, please.
Okay, so let's see. So I will just chart this and hide it for a second. So for instance, right, if we looked at, let me do this. Wait, let's see, I'll use this. If this was our channel, right? Let's say this was our channel here that was going on. Imagine this is a week, right? And our session volume profile, let's say, happens to be the value area high is here. Value area high is here, value area low is here. So far, so good?
Yes.
Yep.
Yeah.
Okay. So now, if this happens, right, a lot of people are like, okay, well, Shorty, which line do I respect, right? And I know somebody was going to ask. So well, I respect all the lines. It just tells me a lot more how to play it, right? So for instance, if we are trading, a stock is going here, here, then it dips here. Well, now, you're getting some data points that you can use. So let's say it goes here and then it gets rejected here. Well, I mean, it's telling me, first of all, that it was not accepted above this value area range. So if you think about this right here, this here is our structural range, meaning just a channel, right? This is our value area high and low of this date, whatever that is, let's say today. Well, now, we broke above the value area, but we are coming back to it. There's a strong opportunity that you can take this long from here to here, right? And those are good trades because they're high probabilities. So you can take this trade here, and then if you see that we're going to reject here, right, then this is your opportunity to short it as well. Right here. Let's say you dip. Guys, somebody has to go on mute.
I'll get it, Shorty. Just talk.
Okay. So now let's say you take that trade. You can go here, but then this is our value area high. If we dip inside the value area high, doesn't mean you short immediately. You short it right here. Once you dip in here, this is your short opportunity, and this is your first exit. Where would be your second exit if you have multiple contracts? So this is our short, right? This is our
Value area low.
This is our first exit here, and then you have the structure low.
Yeah.
And this is where you get out. So just think about it. You have a range, and you're just playing acceptances and rejections, right? So now, this was a scenario for the short. Okay, well, let's kind of delete this. And I just want to make sure you guys understand this, right? So then, let's say we do the same thing. I'm just throwing this up here. We're rejecting, bouncing here, and then we go in here. Where should you go along now?
On retest when it bounces out from the value.
Retest of the structure low.
Retest of the structure low. Where's your first target?
The value area.
Value area
Yeah,
low.
value area low.
Okay, I'm going to teach you something now, so you're not a retailer. Most people add when they're down on a contract. You need to add when you're also at a really good setup. Where would I add? If I added my initial position here, this is my initial add here, right? Agree? Everybody agree? And the trade is going well. Where's my next add?
Retest of the value area low.
Boom. The retest. I want to go, once I do this, let it establish. I want it to be accepted. This is my second add. If I was just testing the waters on this small range here, which, whatever, I don't know how much is this, just let's say 20 points. I get the 20 points with the high probability, right? Because you accepted the area. Most likely you're going to go to value area low. But then once you get inside the value area low of the session volume profile, you come back for a retest. This is where I add more, because now, I mean, I didn't mention if it's previous there or not, but there's a high chance you're going to go to the opposite extreme of the value area, which would be right here. And this is where you would trim. Let's say you had 3 contracts, you would trim 2 here, and then if this goes over, you don't add here. Why wouldn't you add here? Anyone? No? Should you add here once it comes back for a retest?
Chance of breakout slim.
No.
Well,
I
the
would.
risk to reward personally for me is not there. Is there traders that would? Oh yeah. But if I caught this move and this move and this move, I would watch kind of cautiously here and see if they can eventually break this, and then I would watch for this range here, and then let that be my entry here. Let these guys get killed if it rejects the value area high, and then they'll, get slaughtered. I would watch this here. It just depends where we are in a cycle, right? If you hit a trade here, you successfully, maybe you trim some and then it breaks and a retest, you add more. I mean, no reason to play this little bit of reward here when you just caught this, right? So if this is the reward that you're after, that's not a lot because you just caught all of this here. Does that make sense?
Yes.
Okay.
So, Shorty, the shaded area is your value area for that day, and then the larger parallel lines will be for the week, like your structure.
Yeah, if this was just a parallel channel here, I would, this is just nothing. These red lines are not related to volume profile. It just means that, let me see if I think Google might have some here.
That's where the price is going.
No, it's just the price has gone over. Okay, well, perfect here. We got one. So here, I mean, look how many days we got a range here. I think there's a really good example here. Okay, you see this? We've been here. I mean, this might be a really good live example. And this might be a little bit smaller. It depends. You can have multiple ranges. So here, if you look at this, there's a bounce here, with depth, reject, came back. It's a nice range. So now if I add SVP in it, right? So here, look, is this the same example that we just talked about? Just pay attention to the bottom right here. What happened?
That's where
Did we lose?
Retest of the value.
Okay, so let me show you now live. So that was September 6th that we were after. 6th. Okay, so here, this day right here. Did we dip below the value area low here?
Yes.
Yep.
And we dipped below the range, but that's called a spring, right? Usually, when it's a range like this that's constructed over a number of days, and I'm thinking this is 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe 10 days. Usually, any dips below this, they're going to act as a spring, meaning that they're going to quickly bring it back inside, and you will have an opportunity to go long. Here, I mean, think about this. If you took this trade long here, that's great, on a retest here, but it was a little. I personally would not, but there's traders that would on 5 minutes. Reclaim if I was scalping, probably. But then look at this here. It goes where?
Value area.
Value area high. And then also, if you look at this to the left, always look at session volume profile to the left. Look at this.
Red on the POC.
Like this is our shelf, not a POC, but the shelf here that is building up, and the previous support here, they're rejecting this. Well, look at the retest now on the value on the range low here. You come back, and this is where you place your buy. Look, this is our perfect buy opportunity. Nobody needs to tell you where to freaking buy. When you just buy here, and your stop loss, you put it slightly below this, and you're good. If they want to get you out, you accept your loss, but it's a very plain trade. And usually, you're going to take your first exit at the previous high that you had here, and then the previous value area, which is kind of like right here, and look at that. So this is my value area low. Look at this right here. Where do we reject?
Hey, Shorty, quick question if you don't mind.
Yep.
Where would you add your option on the retest display?
Right here.
Okay.
This is my ad here. We broke out of the value area. out of the range, I'm sorry, and out of the value area. We went up. You have to be patient. And, you know, if you wanted to play this right here, I'm sure if you go on like 3 minutes, you might have a little retest, but nothing great, right? And then here, whenever you're above POC intraday, what is that telling you? Same person that asked.
Do that one more time, please.
If we are above the POC for intraday session, what does that mean?
You're on the uptrend.
Bullish.
Not an uptrend. There's a difference between bullish and uptrend. Okay. Uptrend is something. What is uptrend?
It breaks the value.
Higher highs and
No, I want a definition. Who said that?
higher highs and higher lows.
Higher highs and higher low is an uptrend. You always pay attention to that. Don't ever forget that. This is our bullish. This is bullish trend. Lower high plus lower low is our bearish trend. So don't confuse the trend, you know, with something else. We could be bouncing here in a downtrend, and we are, right? I mean, here you have a higher high, you have a lower high, lower low, lower high, lower low. So we're still bouncing, but we are playing off of the rules of volume profile. So here, this is a really high probability trade, guys. Whenever we break out of, you know, if you have a structure like this and you have a value area that breaks, that's usually going to be great for a retest, right? So I'm just going to delete these lines so you guys can see this. Let me go on 15 minutes. That gives me the best view here. And I'm just going to not extend these here. Okay, so we have a nice range here. Now just kind of pay attention, right? So this is our value area. Low, we bounced off of it. And look at this first rejection right here. Your previous value area becomes your first target. And look at this. If you took it here on the retest, right, on that range that we had, your first rejection is here. Then you go above it, and what should you do?
Retest, go long.
You go for a retest and go long. And then if you look around, I mean, don't be blind to only a previous day. Look at this value area low here. Look what happens. So you have a previous day value area low, and the day prior to that, you have a value area low. Look at the bounce right there. You go here, and if you put your stop loss right below this little shelf, or if you use this shelf a couple of days ago, you have a nice little shelf, you put a stop loss there, then you can target, you know, your next POC, which is, you know, you have a previous POC that was lined up here, I guess 2x POC. So you have an exit there, and then the value area high was here, and then your final one was right here. And I think all of these trades would have worked, but you just have to kind of understand the volume profile and how to play the ranges, and that's kind of what I was covering in this example that I was trying to explain here. Does this give you guys any clicks like, oh shit, or not yet? It needs to give you oh shit moment.
Yeah, for sure, for sure.
It's getting there.
Okay, good. And the same thing happens, right? I mean, if you're on the upside trend, right? So if you go somewhere here, and if you're to turn on the SVP, so let's find the range first, much easier for me, I don't know why. For instance, let's go on 30 minutes. I would say there's maybe a range here. Let's see. Yeah. So we have a range here and a range, I would say, somewhere around here, right? I'm talking about this little section here. Just here, right here. And you guys see it, same concept. You have 1, 2, 3, 4, 5 days, couple of peaks out of it. And we can even mark that range on the top right here as well. So you can see here, you know, hey, we went above the range, and look what happened here. What would we call this right here?
Spring.
Be
reversal.
Breakout.
I want the perfect word for it. I want everybody to understand this slide here.
Rejection.
That's a rejection right here. It's a rejection of the value area. They did not like the area, structural rejection here. They did not want it to go above this value area of that structural here, of the extreme high of that range. And they really brought it back in. And where did they go? If this is our top here, and this is our bottom, they went to the structural low. and then they brought it back and they rejected it. You see the wicks right here, they rejected it real nice. So they rejected it, and then they go about it, and then they brought it back again. So you know, if you look at, you know, a couple of, I'm not going to go in smaller time frames, but hopefully you guys can think now, you know, I'm looking at 30-minute range, but doesn't mean I take a trade on 30 minutes, right? I would look for a trade on 5 or 10 minutes and look for a candle or a hammer or a pin bar or some kind of confirmation, right, that this is going to work out, right? And here, you know, you see, you know, you open and you literally dump below this range here, and then you come back for a retest, and then you dump to the structure low. Then you gap over it, and then they set up a trap. What would you call this right here?
Rejection.
It's a rejection of the previous value, meaning that there's more value being found, and it was a trap for the short side. They already did it twice, and here they said, no. You buy the puts, we're going up. And look what happens here next. This is called what, man?
Acceptance?
This is the acceptance. They're accepting the new area now. Here they rejected it, and now they accepted it. And where do you think you're going to go?
Structural high.
Always to the structural high, and you get out. Until when would you hold it through? Anyone?
And they accept it.
The wick.
And how? Yeah, there you go. Good job. So you would only hold it through is if they come here, and you don't hold it. There's no reason to hold it. Why hold it and live through this crap right here when you can just close your trade, and then if they go over it, come back, you're not going to lose much. The theta is going to be on your side, and then you take a long. And then I don't know where this stock went, but here, another rejection. They dipped below, and you see here, look, they dipped below, and I didn't draw these channels perfectly, but if you look, they rejected it here again off that channel. Then here, there's a little cluster. They accepted it here. They came back, bounced it, dipped below, rejection, dipped below again, rejection, and created a new value area here. Like this is literally new value area created right here. And once you start thinking about this as a balance, imbalance, and rejections and supports, that's when it's really going to click for you, and you're going to start making money. And especially if you put a little bit of discipline. No, most of you, you know why you guys lose money in trading?
Impatience.
Because you guys are buying here. You guys are buying in no man's land. You guys want to buy here, trade. You want to buy, trade here. There's no discipline, or, you know, usually the way you confirm a trade is how would I know that I should buy a retest here? Anyone? So like here, how would I know I'm going to buy a retest here? What are the triggers that you guys could use? There's no right or wrong answer. I just want to hear some of you guys in the group.
Confluence points.
Okay. What kind of confluence points?
I would look for a long wick, confirming that there is seller or buyer on shares that I'm playing.
Yep. Okay.
Lines.
Breakup value area has those POC.
Waiting for a candle close below that specific area, maybe like a couple.
Yep.
That's good.
Also just paying attention to like CAD and VIX and seeing if it aligns with what's like happening with the move.
What about volume?
Who said
that too?
Remy.
That's the one I was waiting for.
I've been listening to you.
The volume is what I'm waiting for. If you look at so now just add volume here, right? If you add volume to this and you see this right here, you're coming back for a retest here, but what are you noticing about volume on this retest? Look at this.
It's increasing.
Oh,
yeah, you got a high red volume right there.
High red volume. Why would I buy here? And then, you know, we will not cover in this class. A lot of you guys are going to be confused and hate me once we do this. You just have to look at a little bit of level 2, and then if you have level 3, just a tiny bit to understand how the absorption works, how the continuation works, and how does overload on the buy or sell side works, and how does it look on a tape, right? So that way, if you just confirm, oh, okay, I see a lot of buyers and I see an imbalance on supply and the ask and the bid, you should know what's going to happen, right? You confirm the volume, you're confirming, let's say, the level here, and then you just look at the tape, like, right? You see, okay, well, there's an imbalance here. Well, I know it's going to go higher or lower. Those are all the cues, right, that you can use for trading. Like this one here is pretty much telling you it's not going to hold. And there's another reason why it did not hold. Does anyone know here? I'm just going to point out. It's in this area here, somewhere.
Higher or lower highs?
There's no volume due to the gap.
There's a gap actually.
Ah, good job. Very good job. So think about it. How many times did we go above this range, and how many times did it get rejected? Once, twice, I would say 3, 4, 5, 6, and then how did they get it over it?
Gapped it over.
They gapped it.
You got it. When the shit doesn't work, they use the power that they have, right? It's called futures, right? They pump the futures up, and look, they create a cycle up, and then they come back, and they come back here, you know, close to the gap retest. If you grab this wick here, they come back and they go along off of that test there. And that's how they're able to achieve it. So if I was to draw a volume profile here from here to here, what would you guys expect to see here in this area?
POC.
Skinny belly.
Skinny belly.
Low volume node.
Skinny belly, yeah. POC.
So now think about this. I just gave you like a weapon you can use really good. This is my value area low of this run up, is it not?
Yes.
Okay, well, this range here that was there is not so much relevant because I know in that range, you gapped it up on the last run with no volume. I'm pretty certain once you get to this that you're going to go to here and you're going to stop there for a second. And look here, from 118 to 107.09, if you can't make money on this trade, then you probably should give up trading. Right? And then look what they do again. I mean, this is our previous low, and this is just kind of like simple trading, honestly. Look what they come here. Come back for a retest, then they dump it, right? And now everybody thinks you're in a bullish run here in the stock market. This is all about market balance and imbalance, guys. I did not go more than that. Does this make sense?
Yes.
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 Did anyone get anything new that you did not know before? Like that it, like, oh man, that makes sense, or that clicked.
Yeah, for sure. The application was huge.
It made
Personally, the structure, I feel like it seems obvious, but you just made it like ever more obvious that there's like the volume profile and then you have the bigger like structure of the market or like whatever.
And then, there's always bigger structure. Think about this. Volume profile can be a big structure as well. So if I go on 3 days here, right? So if I look at 3 days on Google, and if I grab a structure, let's say I grab this structure here. What do you expect this to be here now? Look at this. There's my value area high, right? I'm just going to color code it for you guys. You guys follow it. So purple value area high. And we'll call this one here, I don't know, green. But my range high is where? Not here, sorry. Let's put it right here because that's where we get at least 2 touches. So now, can you guys foresee the example that we talked about earlier that I was trying to give you here from this picture? When I said, you know, and I covered it earlier when I drew it manually, it's the same concept here. You dropped out of this massive, from April 26th to now, you dropped out of this value area low and you bounced. Well, you dropped out of it, you know, you don't go long here because you wouldn't know to go long here. This is the first touch. But a patient trader is like, okay, well, you're coming back to this value area low here again. And where should you go?
Long.
You go long.
Yeah, long.
You go long. You go long, and then think, guys, I'm on 3-day chart. I mean, that's big boy chart, right? So let me just zoom in a little bit so you guys can see this. This is just the beauty of charting because it's art. So now you drop below here, and look what happens. If you go in smaller time frames, guys, this is called a retest of the value area low. You gapped, you come back, and then you go. First exit, always POC. Second exit, value area high. And third exit, structural high.
Why wouldn't the purple line be lower? You see how there's that? Is it because that volume is too small? The bottom one.
Hold on, purple is on the top.
The bottom dashed one. Shouldn't it be lower at the end of that volume profile, or is that volume way too low? Like there, yeah. Should it
No,
not
you
be
can, yeah. No, you can put it there. I was just going here just because I see there's a volume here that's cut off, and this looks like a failed option on the bottom.
Okay, so it's just like way too low, I guess.
Yeah. Yeah, and if it dips below this, there's probably a high chance that they're going to take over. This is almost like a little spring right here and called a liquidity grab.
Would you have shorted at the 118 level after it kind of went down below and then kind of came back up and kind of toggled on that value area high a couple times?
Right here?
No, farther to the left.
Here?
No, keep going to the left.
Right here?
Even more to the left. One more. Yeah, that little cluster there.
Oh, yeah.
Well, it depends on what it was at that time.
Yeah, but if I saw these candles, right, and I think we actually did short it at some point. I forgot where we shorted it. I don't know if anyone remembers. We did take a short on Google. But you look at these wicks here, right? I mean, you look at regular candles, you're looking at these wicks, and you're noticing, somebody mentioned that earlier, as a Q, there's a lot of wicks on the top. And this is like a hammer candle here. You have another one, and then, once you're able to break below this one, or this one, depending on the position of them and the lows, once you break below that, I mean, it's pretty good. You can short it, but just know, your POC is really, really close here. And usually you don't want to take a trade that's very close to a POC because there's not a lot of meat. You're going to get some kind of reaction at the POC. So here, if you took a short off the top, 118 to 114, that's not bad, right? I mean, you could do that, but then you have the upside. You have to keep your stop loss right above here. So your stop loss is, your risk is 2 to gain 4, so it's 2-to-1 trade. But yes, typically, the value area highs, especially when it's on the long, I'm talking about a couple of months here, April till September, I don't think people are personally selling Google here. I think, it's probably one of the strongest stocks, and just fundamentally, it's a very strong stock, and I don't see them going anywhere. They're just trying to buy it up now. Because when they did the split, and I forgot where they did the split, it's right here. Yeah, so they did the split 20-1, and I remember this day like it was yesterday. I told you guys the Google is going down. They will not buy Google at 120, and they drove it as far as they could. And where did they drive it? Structural low, and this is where they loaded up, right? And then now they sold it all the way up here, and now they're looking. Hey, do we go long here or do we not? And what did I tell you about the range when you have a higher low in a range? Like you have the same lows, but this one here is different. Does anyone remember?
Bullish?
His probability is going to go up.
Compression.
It's a high chance that they're going to rip this to the top now.
Mm-hmm.
But didn't you last week also say that it would possibly go down to 102 and make it look like it's falling out of that balance area and then wick back up?
Yep, and that's what they did here, and that's definitely a possibility. If they want more shares, because they know, what do they know about retail? The retail stop is right here. So the reason why retail stop is so important, does everybody understand why they use that to their advantage? They're able to see where your stop loss is. I don't know if you guys know that or not. They see your stop losses.
You mentioned that. How? How can they see it?
Because they see every order that comes in through the exchange.
Oh, that makes sense.
So if they know that here, right now, there's, let's say, I'm just throwing a number out, let's say 55 million shares at this level, free to buy if stock reaches this level. Okay. If I tell you that you can buy 55 million shares, but you have to get the stock to this level and dip it below, if you're a market maker or a hedge fund, kind of news you think you're going to fabricate or, accidentally come up with. you're gonna try to do whatever the hell you can to go into this. It's called honeypot. Then you drop it here, and then when people start selling, remember fear, and people create fear, they start selling. Then they're like, okay, well, thank you. We grabbed your shares, and then most of the people's stories like me at Amazon at $3. Well, you did. You had Amazon. They bought it from you because you're an idiot. They made you scared, and they bought your shares, and they needed the liquidity because they buy large sums. So once they dipped below it, you gave them their shares. They're like, okay, thank you for letting us buy this low. Now we go high, and that's called a spring in Wyckoff theory too. So once you drop it here, it's called liquidity, and they have nothing else because they bought everything you're selling aggressively. Remember, it's about how aggressive or passive you are buying or selling that drives the price. Aggressive buying drives it up. Aggressive selling drives it down. Just like here, they came in and they're like, "Oh, we're gonna sell it." But I wouldn't be surprised if they do another dip, another rip.
And that would also complete that failed auction too, right, Shorty?
That's correct. That would be balanced out.
Based on what you just mentioned, it's making a higher high, right? So
it's making a higher low.
Higher low, excuse me. Yeah, so it should, based on what you just mentioned in your last class, I'm not sure it should go up, right?
It should, yes. And then, you got to watch, right? So if you look at the volume profile here, so if you go back in time and you pay attention, right, you see that based on this value area low, you had a nice little skinny belly all the way up to here. So if I go to this level right here and I put it, look where we reject it. Right on it. Right, this is my first shelf. I always grab the biggest shelf off the skinny belly, and I told you guys to do the same. And you look here, and it rejected nicely, right? So now, if we go over it, there's a strong chance for the retest, and then you go long to this. That would be your sign to go long. If you want to add, you break the POC, you come back for a retest, you take it to 118. Then again, if it breaks over, it comes back, you would buy here. So the way you would play it is based on what we just covered in the class. So if the price goes here, your first ad is there. You can trim here and then wait for it to go here. Second ad, trim, break, add, go.
Retest, yeah.
Yeah, man, you're sharing something that is key, I think, for me, because I used to always add to my losers, right? And now I just gotta wait for the retest. Yeah.
Yeah, that's the hardest mindset, Coleman, you're gonna have, right? Or Coleman, sorry, I called you Coleman, Ghost. That you're gonna have is that you want to add to these positions. A lot of people add to a position. So, for instance, I see people, even in our Discord still, they go here. Let's say they go long here. They did not get a breakout. They don't get a breakout, but they went long here. Then this one dips, and they're like, "Man, it's gonna go long. I'm gonna add more here." Then it dips a little bit more, and then they're like, "Man, I'll add a little bit more." And then what happens to their account right here?
That's me right there.
Bye.
And you go to zero. You don't buy in the middle. That's what you guys have to get rid of. You don't buy in the middle. Like you do not buy in these areas. You buy on the retest of the key levels.
What happens if I got a question. What happens if it when it breaks past the shelf there and it doesn't retest and it just keeps skyrocketing up? What happens then? I mean, how do you handle it?
Don't get into a trade. It wasn't meant to be. There's another one.
So you just wait for the next shelf and retest on it then?
Yep. Find a new stock. There's somewhere in the market that something is going to retest.
Shorty,
the market is not going to go anywhere. The market is not going to go anywhere. There's going to be plenty of retests.
So you do your charting on the 30 minutes, then for the retest, you go back to the 5 to have more like a granular view.
Exactly. So I would look at this, for instance, if I was looking at, what is this, AMD, I would look at this right here. I'm just going to use horizontal line. I don't use them a lot, but for instance here, right? I see this level here, had some traction. If I go even a little bit more, these lines. So for instance, if you just go here, you're able to kind of figure out if this level is pretty good, right? So it acted as support here, support. And not every time are you going to get a single perfect line, right? It's okay if you don't. like here, if you do this, this is not a bad line, guys. It's not going to be a perfect line. This is perfectly okay. A little bit up, a little bit down. That's okay. This is our zone that you're playing. And then you do the same for the bottom, right? So here you're looking at this. Let me just zoom out a little bit. And here you have a little weird candle trap. And then you do the same on the bottom, and then you play it. So if you look at this one, for instance, okay, I use this one wrong color, but sure. And you can do the same thing right here. Let me just extend this, right? Okay, so now, if you want to go long, you really have no business going long until this level is reclaimed and retested, do you?
No.
All right. I'll send you guys a screenshot of my shares. Did I tell you guys where when I bought AMD? Does anyone recall? Somebody said, I thought you were going to add at 60.
That was me.
And what did I answer to you?
That you'll buy more at that level.
That I'll buy more at that level. My first level was here, and I added, I think it was 77.80. Let me see on my Fidelity. Here, I'll look it up real quick. I added shares on this one at 77.80 or something like that.
Just send me your info. I'll look it up for you.
No, yeah, I'm sending it right now. Fucking dumpster. So my price on AMD is, where the hell is it? 78.84. So somewhere around here, I got that. Somewhere around here. I got this, and now, up whatever, 10% or close. But, am I going to sell here? It just depends what you do and how you're going to do it. Am I going to sell AMD here? Probably not. Should I sell? I could make a little bit of money here and trim it, yeah. Or what I can do is I can sell some covered calls, and that's what I did, right? I can protect my share profits now just by selling some shares and calls against it because it's covered. And I kind of protect myself in case it dips. I'll collect the premium off the calls. But that's a different topic. But does that make sense?
Yeah.
Shorty, question. You averaged down today, correct?
Which one? Which time?
It was today in the morning. It was one of the puts. I remember you said you averaged
4,100. Yep.
I want to know why, what's the methodology? Because obviously I feel like you can still average down, but with the proper confluence and reasoning,
So today, I knew that it was going to be a wide balance day, and I mentioned it last night. When I looked at the schedule for today, nobody's going to take many bets today that we're going to go higher. So when the New York Stock Exchange opens here, let's see, this is our low here. This is the low of the day, and then if you set the high here, where was it? I think I was going off of something like this here. So when it dipped above here, and I think you're talking about somewhere around here, when it dipped above it and I saw that there was wicks here, I started adding more. And I added again, and then this is the play kind of where I got out of it. I knew that this is going to be a wide balance. I just didn't know how big of a wide balance they're going to create. So I missed it by 7 points. We also had, I don't have the levels here, but I think it was 4133.5. I can tell you here. I had a level of 433, yeah. 4133.5 was the level that I was watching. And if you look here, this is where I started adding, right? We popped whenever that was here, and I'm like, okay, I added here, and I'm like, okay, well, I know you're not going to go. There's no way. And then I started adding. I added one more, and then it dipped here, and then it dipped to the next level, and I was able to get out profitably out of the trade. That's the only reason why I added. I knew the type of day we were having. I knew what's coming tomorrow, and I was pretty certain that we were going to go and all the way to the value area low of that day. But that's because I had 50% of it worked out was the type of day we were having. If, that there was no CPI tomorrow, and I probably would not have added, I probably would have been stopped out. Okay. Look at this rejection today at 6. Okay. So let me go back. Does that answer your question?
Yes, that helps a lot. Thank you so much.
Mm-hmm. All right, so let's see, ES right now, I mean, this is our range, right? If you look at it, this is our range. We're rejecting in here, and it's okay if you draw multiple ranges. I see, right, I see another level that I can draw, and this is more practice rather than, you know, like, oh my God, am I right or am I wrong? If you look at this, right, there's some level here, you know, you have a level here, the body of this candle respecting this level. So this level 41.23, and like I said before, you know, don't be shy to do this. This is totally okay. You can do this. So now you just simplified your day in charting, right? I mean, now all I have to do is turn on the SVP and I see, okay, well, you're inside of this range here, right? This is our value area high and low of the previous day. If I break 41.23 and I go below it, high chance that I can probably get a trade for 8 points here. And then if we lose that guy, high chance to go to 4,100. So about 22 points, 23 points that we have here. And then it just depends, you know, if you're intraday or swing trader, what type of trader you are, right? So now, you know, if I wanted to add more detail to this, this would be what I'm looking at, right? And everybody should know why I'm doing this. Why did I do that? Coleman, Ghost, why did I do that?
Seeing whether buyers are defending their levels and also what potential sellers are stepping in.
Nah, no, this is for buyers only. I grabbed the uptrend. I only care about buyers now because we're in an uptrend, and I want to know. Yeah, I want to know where they're going to be bouncing this, right? And if I see that there's skinny bellies, those could be like selling opportunities. If I want to know where the sellers are, I might have to zoom out a little bit, right, and look at the previous downtrend. Like let's say this one. If I look at this downtrend, I might have to look at this. Ooh. And why are we rejecting here? Is there anything interesting here?
POC is sitting right there.
It's also August POC where we rejected.
Yeah, and this is the simplicity and patience. And if you guys go back into the notes before I left for vacation, I'm pretty certain I gave you guys this 41.38 level. I know for a fact because I also watched to see when it's going to get there.
So you draw those voting profile just when you want to see where the sellers at? How can you find where the buyers are using the same method?
Well, I know the buyers are here because they're in an uptrend. I only grabbed the uptrend to see where the buyers are. I did not. When I went downtrend, I only included it from the impulse from the top to the down. I did not include all of this here. If I include all of this, I'm able to see the cumulative of buying and selling now.
Oh, gotcha.
So now we know, you know, you dip below this level, which is, I would say right here, 4102-ish. On a good day, you call it 4100, right? Because you have a skinny, you see this little tiny shelf here. There's like right here, 4125. Once you're able to break that, that's a pretty good short on a retest. But, you know, me personally, there's not a reason in the world you should not short it here. And what does it look like all the way to 39.80? Guys, please pay attention. I'm giving you. Okay, so think about this. Right here is our POC, right? You guys agree? This was our POC for sell-off. I'll move it here so you guys can see. There's a POC right here for sell-off. Agree? 41.39.
Yes.
Our POC for buying is where?
Yeah, that's like a big skinny.
39.
There's
a skinny belly.
And look at this. Once you drop below here to here, what do you have?
Big gap.
Place.
A skinny belly.
Nothing, guys. There's literally nothing. Yeah, there might be a little bit. And when I say there's nothing, yeah, there's levels. Don't be like, oh, Shorty said it's just going to go here in one candle. No. That's not what I said. There's going to be a bounce. You're going to get a bounce in the value area high. There's going to be a buyer sitting here with his tiny little order at 40.70, right? Once that breaks, they're going to go up here. They're going to pump it up. And the reason being is the high and low breaks right here, right? They're going to pump it up here. They might get a bounce. People are going to be like, nah, man, we're not going below 4,000. We're going to go below. Then we're going to cruise all the way 39.78. We lose that. Then we go to value area low. And that's where you want to be kind of cautious and switching to kind of calls. And here is a perfect example of what we just talked about on a bigger scale, right? So here's your range, big old range here. You know, if you're looking at big picture, right? And look at this. This whole sell-off here, you know, the value area low is right here, right? Sorry, I'll mark this one purple because there's too many lines. So if you look, think about it, the sell-off value area low is right here. Once we reclaimed it, we came very close to a retest. And if you, I always tell you guys this, it's not a single line. Grab the latest shelves around it, like this one here. Let that be your demand zone, right? So look right here. Came back. Where do we go? Boom. Retest. And then where do you go next? Think about the bigger picture, left profile, not this one. I don't care about this one. You wouldn't know this one. Where are you going to go next? What are the three targets if you're buying on a retest of value area low that I mentioned earlier? What are the targets?
POC.
POC is the first one. What's the second one?
Value area high.
Value area high. After
Where are we right now?
POC.
Good job. That's exactly how the trade should have worked. And now people are buying a lot of calls here. You do not buy calls here.
Puts.
You can buy puts, but you need a little bit of confirmation, right? You need to break below this shelf here. We need to make sure that we are breaking below that, you know, that the sellers are getting a little bit aggressive.
Yeah, so you drop down.
Yeah, and you could have gotten in here, but they did it after hours, you know, and a lot of you don't trade futures. But this was a great level, and I'm pretty sure, man, I'm 100%. Oh, okay. Not that I'm sure. I know I wrote it. I remember the words I wrote. What does it say here?
That's funny, man. What a 138.
And where do we go?
So the perfect short for this one, you will wait for the retest again, right? On the
a lot of times, me personally, the way I trade them, I'm a little bit more aggressive. I would have been short here during the day. Yeah, like this is a really good short for me. Like I trust the POCs more than anything, because if I get in here and I can put my stop loss, let's say right here, 10-point stop loss, where's my first profit?
$472.
Okay, no, you have to think now. Do not throw numbers out. I want you to think logically. How do we find where's your first profit? It's not this volume profile. It's not this one. It's where the buyers will show up.
Okay.
My first exit is where? Here, I'm giving you free class on this one. Come on. Where is it?
Value area high.
That's exactly it. Now you just found where they're going to buy back and you get out. So from 40.39 to 47, you just got 70 points. A long contract, you just made $10,000 on US futures.
Is that the 30-minute, 30-day SVP that you've put on?
No, this one is this is a fixed profile. I was grabbing just a fixed range. I was looking at the uptrend. I'm looking for the imbalance that happened, and I'm trying to find where the buyers and sellers are.
Got it.
Yeah. So now you lose this 40.69. You know where the next one is, 39.78, and you lose this one. And what do you guys notice about your risk and reward?
Risk is minimized when you say that your reward is increased.
Ah, yeah, there you go. So now you need to monitor yourself when you trade. So if you look here, this is a pretty good risk to reward, right? This one is also pretty good. And where do you think retail gets their puts?
What'd you say?
Where does the retail get their puts?
There you go.
At the POC?
They buy puts right here.
Yeah.
Guys, somebody's mic is like super loud. Thank you. So the retail is looking to buy puts right here. They're like, man, We broke 4070. We just broke 4,000. And then what happens? Shorty goes long here.
Rip.
And everybody else that trades, you drop, not straight line, you go long, and your first exit again is 4069.
And these are all 0 dates that you're purchasing?
It depends, right? So this one here, definitely not you see how long it took us to get this? I mean, you want to be careful when you do that. So here, it took us 6 days and 3 hours to get there. So can we drop this in a day? Yeah, tomorrow you could drop, the IV of implied move, I believe I said, let me go back to my brain. 72 points? If somebody has toss up, you can check. I think it was 72 points of implied move.
If CPI is at 8:30 in the morning, why is the day supposed to be volatile if it's before market open?
Because how the other market players are going to react to the news. Not everybody has the same reaction. How did you react to Queen dying in England?
I didn't.
How did somebody that's in Britain react to it?
Oh, they were upset.
Okay, thank you. I just answered your question the best way I could.
Also, with big news like that, people were going to be profitable, like selling merchandise or anything now on her just because she died.
Yeah, I mean,
so how would that affect, I guess.
Yeah, that's a different topic. That's going to take us down the rabbit hole. All I was trying to say is that different news are understood differently amongst different hedge funds and different economists. If you think about our previous Fed, heads and, Bernanke, right? I mean, the dude could not agree on any policies in the economy. And even now, he's like, yeah, man, this is a bad recession. He's saying that this is a bad recession. It's going to be a long recession. But you have Jay Powell saying what? Oh, this is not a recession, man. This is just normal stuff, right? So different people, different hedge funds. Think about it. Some of these people are long, maybe from here. And what do you think they're going to say? It's a recession when they just entered long here and we are below that level?
What do you look at in TOS to see the move?
If you go under contracts and you consolidate the options, on the far right, there's a plus minus sign.
Yeah, I mean, do you use SPX SPY?
ES.
Yeah.
It's dash ES and TOS. I think it was 72.
It's not showing me. Yeah, it's not
Go
showing.
SPX then. Go on SPX.
Yeah, it doesn't show it on any of the damn thing, which is why I was asking, because I know it is unlike the regular tickers. It just shows to the right.
Yeah, just said SPX. It should be there. Or SPY. SPY is good.
I can take a screenshot and put it in chat.
Yeah, do that. People know.
Yeah, shit just isn't showing. I'm probably doing something wrong. Oh well.
Okay. Frozen balance value area high is done in previous day on 30 minutes. Yes. It's not, it depends. It's yes. I use 30 minutes to find my areas, right? So let's see. I'm going through the chat now. Sorry, guys. I was focused on this. Okay. Okay, that's in the training room. Initial balance high and low. We didn't spend enough time during the weekend. It seems like reading. Imbalance, volume, buyers in control. Okay, thank you, Frozen, for correcting Dumpster on his grammar.
Shorty, can you show us exactly how you use that fixed profile tool?
Yep, and there's a class on the fixed profile tool. I think it was last week that we did it, right? So, for instance, if I want to look at something like, let's say, 15 minutes, right? Now, this is pretty good. Right? We could use it for tomorrow. So if I see, there's 5-day run up here. From here, you see how we are creating higher highs. Well, I want to kind of find an imbalance where it happened, right? So usually it'll be a big green candle, and that kind of starts here, and there's a lot of volume on it, and then a decreasing volume, which is not the best setup, but now you look at it, right? So now what I want to know is, I want to know from this imbalance where it started to the current high, where are the buyers? So, well, if I look at it here, I mean, unfortunately, all the buyers and the heaviest volume is being set up here. Either they're reaccumulating here, or they're doing what?
Distributing.
Sell it.
Get ready to sell it.
They're getting ready to dump the hell out of it, because they loaded it up all the way from here. You see the value area low is here. Well, and then we had like a nice skinny belly, and we ran through it. Now it's important, right? So if you look at these levels right here, 41.18 or whatever this was fairly important level. And then you see here all the way, I would say, to this level here. Brings it back to 49.925. I would probably go all the way to here. Make sure this is not a stick so I can see the damn lines. So something like this. Like once we lose this area, then it's potentially short on the retest, and then there's pretty good chance they are going to go all the way to the bottom. But then if you look at the SVPs, you can help kind of figure this stuff out, right? So let's see. Why is SVP not turning on? So here, if you look at it, right, this is my value area high and low for the previous day, and we went above it. And what did we do? So you see that you retested this level. So this is a pretty good level if you lose this. So how would you guys short this? Let me just ask you guys. It's so obvious. I just want to see how the hell would you guys play this? I just don't want to give the answer. Somebody tell me, how do we play this tomorrow?
Short the retest on the value area low.
Okay.
That's open inside the value area range. Is going to go back to the PLC.
Well, I would short the retest of the PLC of yesterday, right? Just wait till it breaks below it, and then
Okay, so
retest.
let's cover the first scenario. Somebody said retest value area low. Somebody said if this goes down, and we would come back to this level and short it, correct? And go to this value area. Is that correct? Did I get that?
Yes.
Okay, that's one valid scenario. That's a really safe scenario. This is the safest scenario of all of them. Okay. There's another scenario that nobody's mentioning.
The retested value add high. Value area high.
Okay.
It opens up in the value area range.
Okay. What about it?
When it opens up in the value area range, it's likely that it's gonna go back to reclaim the POC, then break to a specific side maybe, and march in that direction with this the high to go.
Okay. What is the 80% rule?
Breaks outside the value area range, breaks outside the value area, comes back in and go to the opposite side.
So we went outside of this value area, did we?
Right.
You want to re-enter it?
Now we're coming back. Now you're looking to see they might pop it back outside. Once we get back inside, and you have 3 candles on 5 or 15 minutes inside of it, where's the 80% chance you're going to go?
Value area low.
Back up.
Well, Shorty, wouldn't you wait until at least you get past that POC from yesterday?
Of course, I would personally, yes. But there's a 80% chance that it's going to go from here. Remember what I said about chance after it breaks POC. Is the chance higher or lower once it breaks this?
Higher.
It's much higher. So once it breaks this POC, this chance becomes much higher than 80%.
Yep.
So you come back here, retest, and then you go low. This gives me a little bit more confirmation, because I asked earlier, what does it mean when you lose the POC?
Bearish.
You're becoming bearish. When you're breaking this up to the upside, that means you're bullish. So far, are we bullish or bearish? Right now, are we bullish or bearish?
Bearish.
Bullish.
No.
Yeah, bullish.
Bullish.
Above the POC.
You are bullish. This is a developing POC. This is like right now with no volume. You're here. This is current developing POC right now. The POC that's important is previous day POC, and you're above it. You came back for a retest and you got a positive reaction out of it. So right now, once we break this below and retest, that's when you get your trade to value area low.
Can you tie this into how you trade SPX? So you'll be watching ES, and when we break this POC from yesterday, then you would short SPX.
No, I would wait for the retest to short it.
Yeah. Oh, yes.
What would you consider a retest? Like a 5-minute candle close?
But 5, I usually use 3 minutes, but you can use 5 if you're not I would usually use 3 minutes. If I see, for instance, you see ad divergence, like ads going down like drastically, or a nice divergence, making lower lows, and SPX, for instance, is making higher or equal highs or close to the highs, I'll potentially even take it before the close. Because I'm anticipating that they're going to drop it.
What was the SPX divergence?
I'm sorry?
What was the SPX? I know the ADD divergence, but you mentioned an SPX divergence?
Yeah, so if ES is making higher highs, for instance, let's say, ad right here, this is an ES chart on 3 minutes, and I look at an ad on 3 minutes, and let's say ad did this, right? If ad, similar chart, and I think we have a script for it, right? Dumpster, is he testing with you?
So what?
Did he create a script for lower study for you?
No.
Okay. We dip here. This is ad, right? And ad is still going lower here. This is ad chart, right? This is a divergence, right? Now let's say this one breaks higher. Now ad is telling me this is going lower, but this price went higher. It happened today.
Yeah, I have that. It's a mismatch or whatever. It's between the oscillator and the
exactly.
You have in the chart. Yeah. No, it's a mixture of a couple of them.
Yeah. So now I'll be able to know that ad is making lower highs, and this one, let's say, made a higher high. Then it's telling me, hey, the market's actually selling a lot of stocks, but you're making higher high. And if S&P is a combo of the top 500 stocks, how can that be? If you're selling more than you're buying.
They were buying like crazy on Apples, and that's the ad is the number of S&P 500s, not just individual stocks potentially pulling more weight.
That's correct. But then if I look at this, let's look at this. Apple carries 7%. If I add up Microsoft and Amazon having a bad day, I don't care what Apple's doing.
Yeah, I took that and I multiplied those weights by the top 5, and then
you could do that
100%. And I've got like Apple at 0.34, Tesla at 0.1, 0.1.
Exactly.
And then divide by 5 or whatever.
Yep, you just grab the top 25 weighted average of those, and that's all you did. But do you see what I'm saying, Bean? Yeah, you can definitely do that.
So in this case of divergence between ad and ES, would you average down on that, or would you still cut at your stop loss?
If there's a divergence here, I would trust the divergence eventually is going to play out, and I usually stay in. Unless there's a skinny belly and they can pump it with no volume, then I'm pretty cautious and I would take it off for a stop loss. Right? If I know there's a POC really close to it, like let's say that this is happening right now, like right here, I would not. If this rips here, I would probably wait for this 2 points to go up to here, and I would probably re-add at that point. Does that make sense?
Yeah.
And I would look for the levels which are around. Like even now, this is a really good scenario that we just talked about. I mean, this is literally it just repeats in the stock market a lot. So here's a range, right? You guys see we went over, retest, broke it, got rejected. We went to the bottom of the range, reclaimed it, went to the top. They went above, they didn't like it, rejected it, went to the bottom, rejected it. Now we went to the top, and look, we're out of the value, we are out of the range, structural range here that we had drawn, but we are below the value area low, and look what happens. Did we just talk about the same example like moments ago?
So it looks like we're heading down to the retest of the lower value area.
Well, what do you mean? Which lower value?
Like that's what we're heading to is like next to go back down and we're going, I guess, retest the lower value area there.
Now you're going to go to POC most likely. This 434, 41345. You're probably headed there. And then if it doesn't get there, you're watching here to hold on a retest now. So that'll be your long entry now. And somebody called it earlier, right? So if you go here, this is your retest. This is your first exit. Where's your second?
Value area high.
Value area high. And that'll be the way you play it. So first, second, and this is where you're waiting to see if you can get in. If you're not aware of this level here, this was your kind of like a clue that you're going to get a spring here.
That's part of the previous structure, right?
That's correct. Part of the previous structure that we had drawn, like from here, and which happened to be the POC. And here we came back on a previous session POC, and it's bounced off. And look what we just tapped, just right now.
That's why having those levels is so important, because someone probably would have stayed in short, thinking they were going to ride it down some more, and then hit that PLC from yesterday.
Yep. Okay, so let me go back to PowerPoint. I just want to make sure you guys are going. So I know this is a lot, but then it covers the type of buyers, right? So it's really just the aggressive and passive. We talked about who are the aggressive buyers. Usually, if people want to get over and move the market, they are the market orders, right? You're not going to move the market with the limit orders. If they have, so if you want to go, if the stock wants to move up, what is the scenario that happens on the tape that you guys can think of? Dumpster, don't answer this because you're an accountant. You get the debits and credits. This is all about kind of like debits and credits. So if I want to go up, right, aggressive buying, what do you guys think happens to the bids and the asks?
There's a massive amount. You just buy up a big block of open limit orders, limit sales.
On the sell side, there's a lot of limit orders for sell. A market order would have to buy up all those orders to go up, right? And vice versa for the down. And then passive orders, these guys are just there, let's say many of you guys know about, who has L3 here? Does anyone use L3?
Is that free on TOS?
No.
Is that L3?
Yes.
So I don't even know what it is.
I haven't seen anybody post it.
Yep. So remember when I shared a screen one time and I showed you guys the NASDAQ L3? I can show it to you guys tomorrow. If you guys recall, remember long back, I showed you guys that there was like some ghost orders when I was explaining that they have an order and then the order disappears all of a sudden. Like there's a massive order at a price level, and as we approach it, it's literally just gone. They move it away, so that those are called like ghost orders. L3 shows, so when you look at L2, like if you go on your toss and you look at it tomorrow, on L2, you're only going to see 5 levels above, 5 levels below the current price. Okay? When you have L3, you're able to see a lot more. You see wherever they are. Does that make sense? You would see all of the passive orders. When you have L2, you only see like portion of it, right? I mean, you would only see, so let me see, here it's going to show 1. And what I mean by that, on L2, it's going to show 1, 2, 3, 4, 5. And then here it's going to also have 5. But L3, I could scroll up and down and be like, okay, well, damn, there's a guy sitting here with $2.2 million order, right? So I'll be able to see that with L3. With L2, you don't see that.
In active trader, sometimes you see those really far up. Is that still L2 or is that an L3?
Are you talking about active trader? That active trader is all the trades that happened.
I mean, in active trader, when you see the bids and the asks, you can see occasionally, especially in options trades in the SPX, a block may show up, $3, $1.50 up, and then it like disappears. That happens all the time.
Yeah, you can see that, but usually not more. You would not see it like far up in the price. I don't think you'll see it past 10, 15 points. Usually it's within 10 points range. It's rare if you see it past the points there. I've never seen it past 15 points.
Yeah, I guess I was wondering, is that considered L3 or is that just still L2?
Nah, that is still L2. L3, I can go and be like, okay, how many orders are at 4,200? I can scroll up all the way, and I can say, man, at 4,200, I see an order sitting for, I don't know, 2.2 million shares. So L3 gives you a little bit of a deep pie, and it can be really deceiving. Like L3 is basically your liquidities, right? I mean, it tells you where the liquidity is, because if the people see that there's a lot of buyers at 41, let's say, 20, right? That means that there's a lot of liquidity buys, and if there's a seller, let's say a stop loss at 41.27, let's say right here, there's a 100 million shares or contracts on ES as a stop loss. Well, then they know, if they're able to drop the price here, they can buy these at there. But what if this guy cancels the orders and you just brought it down? And those ghost orders happen a lot. Yep, there it goes. Yeah, that dumpster just posted. That's the book viewer there. Shows the whole book and the number of shares, the number of orders. It tells you a lot more, and kind of like which exchange it's coming from. Okay. So that's the passive, and then, you guys should know this by now, and if you don't, it's in 101 trading and covers this section here. From here, you can figure out, are responsible buyers, are they aggressive or passive? Are these buyers aggressive or passive?
Pass.
Pass.
Yeah, these are passive. These are the guys that move the market. Okay. Then we kind of talk about the tape, right? I'm kind of giving an introduction. How do you look at the tape? And what does it really mean, right? If you look at so this is usually what you guys would see on your tape. If you were to look at like an L2, you would see a couple of orders down and a couple of orders up, and you see the price. And usually when you look at this stuff, and I don't know if you look at the diagonal between, right, between this and the next one here and the next one and so on. You look at the diagonal way, not like horizontal. So you want to make sure that you're aware of that. And then you can kind of go into it and understand what does it mean. Aggressive seller takes liquidity from the bid, right? So if he's trying to sell it, an aggressive buyer takes liquidity from the ask. So if this guy has a 100 order here and this guy has a 75 order for sell, well, this guy is going to overtake this one and go to the next level. Does that make sense? This is fairly simple. All the guys right here would be the passive buyers below, because they're just waiting for the price to come to their level, and then a limit buy order becomes what? Is executed as a market order, right? It's executed as a market order. So, and then the same happens on the other side. And here's the example that I talked about earlier. For the price to move down one level, sellers must consume what? Here's a visual of it. Do you guys understand this? This is just an auction, guys. This is fairly simple. It's market auction theory. Same idea. If I want to go to the 75 points, right? If I want to go to $100 to be accepted, I need to take out these 75 orders here to buy them all. And then if I want to take 101, I need to consume all these 90 orders and so on. And then you see at 106, there's 900 orders or whatever, the size of 900, fairly big. And especially at 107, seems like it's going to be a bottleneck there. And then you look at the, the left side and you see, hey, how much are we willing to buy, right? So far, if you just roughly add up these, that's like what, 116, and here you have about 165. So it seems like in here it would be really, really tough to move this price here because there's not a lot of aggressive buyers coming in. And market orders, did they show up on a tape?
No, they don't.
Market orders don't show up on the tape. It's just limit orders. That's why they moved the market. So somebody can click Because you don't know, how do you know when Shorty is going to click market buy 85 here? How can you tell that? You know, there's no way. It's executed at the best possible price, right? Best possible spread. Okay. And then kind of go on, you know, to show you what I just kind of covered right now with adding here. Large imbalance between buy and sell limit orders, the lack of selling interest, right? If they're not willing to sell at these levels, what do you think is going to happen to the price?
It's gonna
drop.
No. Think carefully. No. This is a trick question. No.
You got people buying it up.
Guys, if I tell you I only have 5 PlayStations at $100, and I have 7 PlayStations at $101, 15 PlayStations at $102, but then the next largest order I have at $120, you can cover, these 2 orders can cover the price all the way up to here. So this is basically, whenever you have an imbalance on the right side like this, that means the price is going to accelerate much faster, especially when you have more buyers on the left and a lot less sellers. Sellers want more for the PlayStation. Does that make sense?
Yeah.
Okay, no, I don't get convincing. Yes. Who's confused?
I'm confused.
I get it.
Break that down again.
Okay, hold on. I'll explain. Okay, so now let's just look here. So you have 44 plus 26 plus 15 plus 7 plus 5. There's 97 PlayStations for sale in the range to $104. Okay, if all of these orders are bought up, 97 orders, and my first 2 orders, they're willing to pay up to this price, right? They're willing to pay for this. So now you have the guy that's sitting with 50 and 60 at this price. In order to move this price up, they have to buy these orders. So these guys would literally consume all of this up to here. The price would easily go to 105 because there's not a lot of people willing to sell at these low prices. They think that PlayStation is worth more than 104, so they placed all of their ask at 105. If I'm not willing to sell to you at 103, you're not going to get it at 103. If I'm putting it at 105, you have to buy it at 105. So if there's not a lot of liquidity here, that means you have to find liquidity higher. Does that make sense now?
Yeah.
Yeah.
It's kind of a skinny belly on the tape itself.
Exactly. That's a perfect way to put it. And then opposite applies as well. Okay, and then I cover this. I just gave it to you so you guys are not confused. Level 2, you don't get that. You don't get more past the 5. So you'll have 5 up, 5 down. That's level 2. Level 3, you get to see a little bit more. And then, in NASDAQ, you can kind of customize it a little bit. Okay. I'll add to this section. I'm going to add a little bit more to the tape and give you guys a few more scenarios on how to read it. And then, I can't teach you how to read the tape. I'm going to give you the scenarios. I'm going to give you the visuals. I'm going to give you what to look for, what to not look for. It happens so fast that your eyes have to be accustomed to what you look for. Meaning that me holding training and you not spending time when it's live is not going to help you. Now that you learn this and you're seeing imbalances, and usually what an imbalance means is that it's 3-to-1 imbalance, right? So here I would say there's a 3-to-1 balance. If I was to add up these right here and these, that means there's 3 times as much buying as there is selling within this first 5 here, right? Usually you want a 300, 200% imbalance in order for the price that it's going to accelerate up. Just keep that in mind, and I'll add that in the notes. I'll give you the, the absorption, the continuation, the, how it's going to look if it's flat, if it's up, if it's buying or selling, so right? Okay. Participants, you guys should be here. You should know the order types, right? So I just added it here. There's a lot more orders than market orders, stop and stop limit. Each one of these will have what? Can I use the market to buy and sell or just buy?
Buy and sell.
Can I do this for buy and sell?
Yep.
Yes.
All of these produce more, so that's why I didn't put all of these. You guys can probably assume to know that. So this is me leading you from auction theory to the tape to the volume profile. Once you're able to combine the structure, which we talked about, right? When you find the channel, you see the structure, then you draw some volume profiles. When you look at the profiles and you see like session volume profile that we just covered the example of ES, when you look at that, you can determine how you want to play it. And usually, you know, when I look at stuff right here, like I'm able to figure out whether it's a one move setup or it's a two move setup, right? What I mean by that, so if I knew, you know, that this was here, so this is my first retest here, I would go long here on the retest. The second move would be, you know, if it doesn't happen here, I would wait maybe for let it break here, and this is my entry here, and then I go long. And then I would find, you know, what's a good exit target right here, which is not part of the topic. I mean, you guys should know that using profile or whatever. You can figure that out. But now, if I know that we reject the value area high here multiple times, I would want it to go above it right now if I wanted it short. Why? Why would I, if I want to short it, why would I want it to go above?
Keep a price.
You want to see a return into the value area?
Exactly. I want to see it go up. I want it to break above. Let it break above. But what do I want to see then?
Failure.
Rejection.
I want to see a rejection. And once I'm able to see a rejection, I know it's headed to POC. And then I know the second profit is right here. So here it goes. Now you watch. We talked about earlier, you know, reclaim this.
Confirmation, right?
That's exactly. The retest is my confirmation. Once it's rejected out of this area and it comes here for a retest, I go short and I put my stop loss probably right above the shelf here. I'm risking a little bit. If the trade doesn't work out, so what?
I know Shorty saying he wants it to go to above, but I love that I entered short right at that level. I wasn't even, watching.
Isn't that considered the retest of the one to the left, that rejection that already happened, right where your cursor is?
Like this one here?
No, to the right of that.
This one right here?
Yes. So
Yeah,
isn't that
this was
right? No, but right. So the one that just touched the 41.36 and came back down, isn't that the retest for the one to the left?
I would say this one completed the whole cycle down.
Oh.
This one went here and it went below this one, right? And then came back and it rejected the value area low as well. So this one completed the full cycle here. It went below here, came back here, your exit here, and then you see they went below and look what happened. Boom. Now, it didn't give you a retest here, and that's okay. Sometimes you won't get it. There's no trade here. Then here, I would say maybe you got a retest here. It's a shitty, sorry, man, excuse my language, but this is a shitty retest, right? So they're trying to trap you here for you to go short, and then they rip it higher to the value area high. See what I'm saying? So here, you know, I would want it to be a little bit higher, and here it comes. So now what they could do here, you know, the pattern traders, how many people are going to short right here below this level? Below the low of the candle right here. Probably a lot of price action traders, you know, or pattern traders of a candle, they were shorted there. So now they could probably pump it up here, get the longs trapped, and then come back here, and then you wait for a retest and take short. Because you're still in a, remember, I don't think anyone has any news at 11:10 just yet on where the market's going to go, and here it goes. So now you watch for long, come back and short, and this is now a double tap, double failed auction here. Meaning there was an auctioneer and he was like, hey, who wants it higher? And it just stopped. It went quiet. And nobody's here, and you're looking at bids here. Look at the ask and the selling and buying. What do you see here now? You see how it's changing here at this level at 41.36?
Imbalance.
So just watch. Whenever it hits 41.36, what happens to the ask? What's happening?
A lot of sellers.
It's 2 to 1.
A lot of them, they're buying
It's like three times the bid.
Yeah,
2
exactly.
points.
So that's the one that's the imbalance, right? So this level here, you see how important it is. And if I draw this level right here, let's call it here. Look at this, 413625. They're going to be there protecting this level. The shorts are protecting this level. They're showing you this. They're like, okay, go below. Nope. Okay, come back. I'm gonna sell here. You don't have enough power to take me out. Look at this, 50 to 6. So now you're watching the fight and kind of the last confirmation in trading that we're going to cover is, we're going to learn more about the structures, learn more about the volume, profile value areas, and hopefully you guys are understanding now how, how the volume profile at least works. Most of you should know when your previous day session, if you're, below, above it, it's very, very important stuff, right? And even in this PowerPoint, I'm giving you some ideas. So let's see. Like here, if the stock price opens above the value area and then it falls back inside the value area, what is this?
Order filled.
It's a very bearish signal, right? If the stock opens below the value area and then it rallies back inside the value area, that is a strong bullish signal for the session day, for that session, right? But then you look at the previous session, right, which is the 80% rule that we get. So right here, you're seeing us that we are above it, and we talked about it briefly earlier. So let's say we open tomorrow above this value area high, and we're above the previous or current session POC. So we're in a good uptrend, and we're above the previous date POC. So far, so bullish. But watch now. If the price does this tomorrow, pay attention. We go here, we go here, and then we consolidate here. What's happening now?
Lower highs.
Okay, but we're in an 80% rule now. Remember, this is my value area high from the previous day. We just entered here and we're consolidating there and here. There's a strong chance that, you should probably short it. Let's say if this value area for some reason stays here, I don't think it will. If this stays right here, I personally would not short it, until this value area low drops, retest, and then go short, and then your POC is the first target. And then you could literally wait, if you're really conservative, is to go here, right? Let's say it drops, you could short here, or short it below the POC once it breaks here, and then take it to the value area low. This would be the highest percentage trade probability right here. These right here are probable, but this one carries a little bit more than 80%. And I explained that below before, I believe. Does that make sense? If our 80% rule is from here to here, I just want to make sure you guys understand. Once you get into the value area value area from the previous day, there's an 80% chance that you're going to go from here to the opposite extreme. If I'm waiting for the retest of the POC, where it's the magnet, does my percentage increase or decrease for the downside?
Increase.
Yeah, it increases. You just told me that once we're above the POC, we're bullish. Well, when we're below it, what are we?
Bearish.
We're bearish. So my 80% goes probably to about 90% right here. And then you just look at the volume profile, that's great. And then if you lose this value area high, this would be gold. Because now, we had a really wide range for the day. Range, I didn't say value area, but the range was really, really high for the day. You see it here. Right, this is our zone. What are you guys noticing now? I'm giving you a ton to look at, guys. This is our structure right now. What do you guys think will happen once we lose this value area low?
That we make our way down to the structure.
Once you get past those shivs, you have a skinny bill all the way down.
Once you do this, there's a really high probability you're going to go to the structure low.
Yeah. Retest and it's going to drop because there ain't no shift to hold it up.
Yep. And then here, if you look at it right, and like I told you, there's not only one structure, your eye has to be open to multiple, right? If you look here, there's one here, there's a little bit here. So it doesn't mean you're going to don't ever think you're going to get a home run. Don't play the home runs, play what you see and the levels you see. Don't lie to yourself. So if I get in short here at 411, well, I would scale something out at 495. I know there's buyers here before, and they'll come here and despite, kind of defend that low value area here. So I'll probably trim some, and then same concept applies. Nothing really changes. Then I wait, and I'm like, okay, well, thank you. And if I don't get the retest, then I don't get the trade.
Yeah, because as the day goes on, that's obviously going to change. So yeah, you'd be looking for maybe new shelves if they form.
Exactly, yeah. And this shelf usually, today's volume profile, because it's a developing volume profile, it will give you levels that can be misleading. That's why a lot of times the previous day levels are a fresh memory of the stock market. The stock market has a good memory for 30 days. Once you get past 30 days, the stock market is like, okay, man, I don't really care about that level anymore. So the fresher the levels, like value area high, the low, like VPOCs that we talk about. So for instance, if we go here and we look at, is there any VPOCs? Well, this is a really, really good level here, the 4070, and you put a little bit of a demand around it. There's a nice little distribution, the volume around it. If you guys look here, I just want to make sure you guys get it. So if you look here, you see this little nice distribution. That's my demand zone, right? I mean, I would consider this to be a demand zone at 4070 level. And this VPOC here is going to carry more weight than that structure for me personally, the way I trade. Is there a chance they're going to buy here? I would be aware that they're going to bounce at 4080, yes. And I know previously that 4080 was important even to the left here. But I know that there's a VPOC here and there's a big buyer here. That's where the imbalance happened. See the big red candle and then the big green just literally bounce it off. And then I know there's a VPOC below that right here. And then you see the cluster right here where we consolidate it, right? So this POC becomes fairly important. Maybe a little lower, but yeah. So hopefully it's starting to click on the volume profile. So the PowerPoint is going to include the structure, right? I'm going to teach you a little bit of the stages, the 4 stages, and the Wyckoff, the 5, including the last one. And then the phases and kind of like what is a creek, right? What is a spring? To help you identify and to kind of teach your brain what to look for instead of not looking at all at the chart and just buying random places. Because a lot of you guys, you get FOMO and you're like, man, I'm just going to, it looks like a good spot to buy right here. And I'm like, for what? Like, there's nothing there to buy. Nobody's there with you. I want to be with the people that are buying. I don't want to buy by myself. I can't do much by myself, so why do it? And the same thing here, once this level comes, so just watch tomorrow. Turn on the tape for a little bit, even though you don't understand everything yet. So just watch tomorrow. Let's say we drop tomorrow at 470. It would be cool for you to turn on, like even if you watch here just alone on ES, just to see once let's say we are at 470, to see what is the imbalance of the, of the 4070. Is it more skewed to the buy or sell? So that way you know if the imbalance is happening. And then you can go in with the buyers and sellers or vice versa, whatever, right? You get the point. As hard as this is, trend lines are really good. Patterns like inverse head and shoulders and cup and handles, they look cool on a chart. So I'm not going to lie. They look pretty cool, but they're useless. And I know some of you guys love it, but yeah, that's about it.
What did you say is useless?
Cup and handles and all of the patterns. Do you think market makers look for cup and handles?
Order filled.
To go along? No, they look where the buyers and sellers are. Because remember, what is the value? I don't see any cup and handles in here.
They use it against you, no?
They use it against you, yes, because they know what you're going to do. There was a perfect one on Apple, I think 8 months back, or maybe a little bit more. Let me go on the weekly.
For head and shoulders and none of that, right?
But it really doesn't work. There was one that was beautiful on Apple. It'll be hard for me to figure it out. I don't know where it was. I think it was this one here, I believe. Yeah, it was this one here. It was this cup and handle. Everybody was expecting this, and look what they gave them. I mean, I think it was this right here. Yeah, it was. I think I remember it. It was kind of like this here, and look at this. They gave you a hammer here. So who got screwed here? Let me tell you. So the guy that had a pattern, he saw a hammer, and he saw what? We closed a little bit higher here. You know, we made a lower low, but we closed a little higher. And then look at this. Okay, thank you so much. We're gonna go to where? You rejected the range stop. Where'd you go? And remember what I said earlier to you guys. Pay attention when you're in a range and it's a failed structure. This right here is a failed structure. And I told you, usually when you have a failed structure, you're going to rip right through the top of the structure. And does this get better than this? It's a really good example of that. You have a failed structure here. It didn't go to the bottom. That means the buyers are coming in. And what do you notice on the bottom?
Volume.
You're noticing the buyers are taking over, but you know, if that wasn't the case, you see here, what do you see on this candle? I mean, similar candles. See, I wouldn't say they're identical, but similar, right? You see a red volume, and here you're seeing a lot of green volume on this kind of similar candle. Just the body was a little bit higher, a little bit more bullish on this side. So it's telling you, hey, we're making higher lows in this range. We're gonna rip right through this. And now if you go here, I don't think we've ever retested this 35-25 range. Just giving you a heads up. Okay, so I'll post this PowerPoint, kind of go through it. If you have questions, please ask. And I cover a little bit more about volume profile. I added stuff. Most of you guys should know about the bell curve. I give you the examples of the value area here and kind of how it works. So for new people, if you're not familiar, the tips and tricks, I'll expand on that more. And then I'm going to kind of add the value area examples that we talked about, you know, the breaking of it. So you're waiting, one, wait for the break, two, go long. This is your long entry here, and then you determine your exit. And then here's your, you know, the bearish side of it. You guys see that we broke above the value area, then we dip below it, and you're looking for a short. And you have first this one, and then you have the second one here. So I'll give you a lot more of these visuals so you guys can kind of embed it in your head to know what to look for.
Are you referring to the current day's volume profile on that, or previous days?
On this one here is on a current day profile, but you always want to, if you're playing, the way I trade is I will consider previous day more than the current day.
Okay, all right.
I put 90% weight on a previous day.
All right, sounds good.
Yeah. Current day profile is a moving target, right? So if you're playing with it, you're in for a lot of surprises. So if you can play off of the previous, that's how you play it. And then here it's kind of telling you the same concept, you know, the probably just kind of adding more details for you guys to start creating pictures in your head. Then the fixed profile scenarios, and then I'll cover that. And at the end, I'm gonna give you guys a picture of how to find absorptions on the market tape. How do they look like, the imbalances, so that way you guys can kind of go over it and use that to be the confirmation. Should you go long or should you not trust that bounce?
Are you working on a quiz?
Yes.
Man, I was sitting over here thinking that.
I need some ibuprofen.
And did you say you were going to add something about looking for continuation on the tape later?
Yeah, so there's a continuation, there's a reversal and absorption, right? So you'll have all three of those.
Yo, Shorty, big shout out, man. I think it's the first time I'm really understanding how the market kind of move. So new to the group, but appreciate your insight, boss.
Yep. No, that's great, man. I'm just glad I can help you guys, because when I started, nobody gave me this. There was nobody that would give it, and they kept it like a secret.
No, that's dope. Thanks, man.
Yeah, it's
gold. All right, guys.
It's gold.
All right, guys, I'll post this. I'll post it up, and just know this is a living document, right? So as much time as I can get between live sessions, trading, I add to it. I added more on the market option theory. Next, I'll add the tape so you guys can have some ideas, and then we'll go from there. And tomorrow, do not chase, you should not trade tomorrow, period.
That's what I wanted to ask. Obviously, I know there's not a game plan because everything's going to be so volatile. Do you have any just like basic, like, not rules, but like key things to consider?
Yeah, I mean, so tomorrow for me is going to be key to this POC. If you're going to lose this POC, I will take a short. If we lose this POC on the retest, I'll short it. I want them to open. I want them to open above this value area high. My goal is that they open above 41.33.
Did you close your 405s, Shorty?
405 now.
Okay, I figured. I was just checking.
No, I just think something is not going to go right.
Yeah, I still got a couple of 405s, but what I'm wondering is, like, would it be more safer to wait till after lunch and things, you think the news and everything kind of die out and get more stable to watch?
I don't know if there's any speakers tomorrow. Is there any speakers after, like afternoon?
I have no idea.
I can check.
Yeah, if there's no speakers, yeah, I'll probably play the afternoon once they give us the idea what's going on. So like right here, I'm looking at this structure, right? You know, and I look at this, and whoever asked, how would I trade it? I said I was short of this POC, right? It's at 41.27. Look at this POC of this whole buildup here, guys. I mean, you spent how many days? You've been running since September 6th. So 6 days you've been running, and the majority of your volume, you know, is coming. So let's see, where is this thing here? I'll take it even more back here. So majority of your volume is coming here at 39.78. But look at this shelf here that's being built compared to the POC shelf. It could be a double distribution, right, on all of these days that we have. So if we do have that, so then, you know right here.
No speakers tomorrow other than 8:30 CPI.
Yep. So this is the way I would play it, right? If you're able to break below this level, I said 41.27, whatever that was. If you're able to break below 40.27, safer bet 417 once we break a short retest. Then you have a 470 target on the value area high retest of these run-ups. If we, you know, get out there and break below it, then you have pretty much a free fall to about 413. And then you really, really have a nice trade here that whenever there's a skinny belly, I will not wait for the retest. Just keep that in mind. If we close on a 3-minute candle here, I do not wait for any retests, because there's not going to be any retests on skinny bellies. Usually they don't retest anything there. Okay.
One more time with a retest. I think you said 3-minute chart usually, and then you look for what, like for a value area low, you would look to see a candle pattern.
If you have a pin bar, if you have a pin bar that's developing inside, that's a really good one, right? So that's also in the PowerPoint. Are you familiar with the pin bars?
Yeah.
Okay, yeah. So I would look for a pin bar to be inside the value area low or something like that.
Okay, got it. And I think you said if there's like ADD divergence, then you don't even need.
Yeah, I'll play the ADD script. If ADD is making lower highs and we're going higher highs, and it's pretty obvious, right? I mean, it's when it's about, like, you know, 5 points difference, I don't care about it, right? They can catch up 5 stocks to go higher. But when I'm seeing that there's a, you know, a big drop off, like 70 points difference on ADD that's dropping, you know, to move 70 stocks above previous day close, that takes a little bit of money.
Got it. Thank you.
Yep. Mm-hmm.
Thank you. No sour cream.
Why?
Because they didn't have it.
They didn't have
All right, guys.
sour cream?
Yeah.
We didn't have any sour cream. Have a good night. Hopefully you guys learned something, and then we'll see how it is tomorrow. I suggest you guys don't trade in the morning. If you do trade, you're on your own, because I won't be trading in the morning.
Today is not my day with this mic.
Yeah, man, you don't have sour cream and you're calling your wife bad names, man.
Yeah.
All right, guys, have a good night.
Bye.
Good night.
Thanks, Shorty. Later.
Bye.
Bye.